Hi everyone, welcome to Tuesday. And given this is the first Tuesday of the year, Happy New Year. I hope it started off really well for you. Every Tuesday, we obviously take a look at the performance of the main board, being the NZX 50 for the New Zealand stock market. Before I jump across and share my screen, I do have some things I want to share with you. This year, I have got planned a lot of really great tools, courses, and resources for you that I really hope will help you on your investing journey, your money management journey, anything like that. Now, I have had some requests come in for some specific courses, and one in particular that you may or may not be interested in is something really simple, and it is how do you actually use the Sharesies app. Now, I'm happy to run a course on this. I do have a very small portfolio with Sharesies. I just do it for a little bit of money that I put aside regularly for my nieces and nephews, and so I'm happy to use that and show you how to use it. So if that is something that interests you, let me know in the comments or direct message me and let me know specifically what you would like to learn so that I can obviously have something set up in the throes before we actually get started on it. Also, just give me an idea as to what sort of times work for you, day of the week, that sort of thing, because if after hours is better, then again, happy to do that as well. So like I say, come back to me, let me know, and we'll certainly make something like that happen for you. Now, before I jump across and share my screen and take a look at how the New Zealand market has performed over the last couple of weeks, just remember that this is for educational purposes only. Definitely not intended to be personalised financial advice. If you're looking for that, then you do need to go and have a chat to your own financial advisor. As you can see up here on the screen, I have got the NZX 50 up, and this is over a 5-year period. And you can see that we've actually hit some new all-time highs. That green candle there where I've got my cursor, that was the close of last week, and you can see there that it had a high of 13,696. Now that is actually an all-time high for the New Zealand share market. So we haven't been making a song and dance about it. It's just been quietly ticking away, if you like, doing its thing. If I go onto all, we can see that a little bit better. You can see that the market got up reasonably high around sort of January 2021, and it hit a high of 13,643. You can see we're slightly above that, which is absolutely fantastic. And you can see that's denoted there by that dashed line. So this is really good news. And especially if you go back, for those people that do get a little bit nervous about the share market, and I can completely understand that. But when I used to give financial advice, this was the sort of thing that I used to show people regularly. If you're investing into an indices like the NZX 50, if you look how far it has come, so it first sort of started, or at least the charts here started at around 2023, and you can see here it had a starting figure of about 1,800, so 1,869 roughly was where it first closed. You can see we went up, we had a bit of a down patch. Now that down patch through there was actually the GFC, the global credit financial crisis. And then it slowly started to trade back up again, which is fantastic. Now these really sharp candles you can see here, that was back in 2020, and that was where we had the COVID crash. And things fell really quickly, really sharply, and extremely fast. But we had what we refer to as a V-shaped recovery, and you can see that there. You can see it's a definite V. Now, that is not normally the trend, not to have such a sharp, fast recovery like that. Normally, it's a longer, slower period that you'll see markets recover, but not in this particular case. Then, obviously, we hit that high of around January 2021, came down, went up, came down again, it's gone sideways. And really, we've started to see our market starting to move again from about May last year, which is really a good sign because we've been really slow, really laggards as to what's been happening around the world, especially in the United States. Their share market has been going, one of them, the S&P 500, has been going absolutely gangbusters for quite some time. And I think I heard last week it had 40 all-time highs last year. So that is absolutely phenomenal. Unfortunately, we weren't following that, but we've just been trickling along quietly. just going to leave it on all, and we're going to put on our moving averages and just see how they're looking. So we'll pop on our 30 and change that to exponential. Here we go. We're trading above that 30-month exponential moving average, and we'll also change that to a 15. And the reason it's come on to month is because I'm looking at it on an all period, and it brings up each candle as on a monthly. You can see that we're definitely trading above both of those, which is great. Let's bring it back to the 5-year chart, because that moves all of these candles to weeklies. And you can see that, again, we're trading above that. And this really also gives an excellent indicator as to how we performed last week. And you can see that with that one green candle. Now, I am recording this on Monday morning. One thing that I just want to zoom in on, if we look at that candle, now I'm not saying this is what's going to happen or not, but if we look at it, you can see we've got a little bit of a tail down the bottom, and that's where you can just see that line forming. And we've also got a bit more of a wick sitting up the top of that candle. Now, the line down the bottom indicates buying pressure. The line at the top, or the wick at the top, indicates selling pressure. So if you were to look at that, there's probably a little bit more selling pressure than what there was buying pressure. Hey, it's still a green candle, which is great. It's actually broken clear of the week before. If I hold my cursor on that candle, you can see that it has broken above. So there's a clear gap between where the previous week's candle closed and last week's candle opened, which is actually a good positive sign. But I'm not trying to guess things, just looking purely at the charts. Let's go on to the 1 year, and that brings out the weekly. And you can really see that on here. You've got some incredible gaps forming. Last week, you can see that we probably had 3 out of the 4 trading days were down. However, we've had some extremely strong buying pressure. So it's really interesting to see this. Reason being is, if I hold my cursor here, so that was Monday, then we had a huge gap. So it was really interesting to see that even though the market went down on Monday, there was obviously a lot of after hours buying in the market after the market had closed and before the market had opened the following day. And that's why you've sort of got that little doji there. So the market really went sideways. However, in those after hours trading, there was obviously a lot of buying that was put into the market. So that's really quite interesting to see. Then Wednesday was down, Thursday was up, Friday was down. If we look at it like that, we are trading above both of those moving averages. That's a really good sign. Let's go back to the 5-year chart. We'll also take a look at the average true range. And I'll just change that to a 21 period. And the reason I've brought that up is to actually see how much volatility is in the market. So if we take that figure of 228.6, divide it by where the market closed last week, so it's 13,696.25, and make that into a percentage, and that gives us about 1.67% volatility. So for me, that's a really good sign. We're under that 5% mark, so we can certainly potentially have a look for any more trading signals. Now, I have gone in and had a look at individual shares. For me, there's nothing that I want to purchase, if you like. I'm quite happy with what I'm holding, but I just don't want to purchase anymore. Now, I'll stop sharing. So it'll be interesting to see what happens this year for our New Zealand market, because yeah, it certainly started off well this year. Hey, there is a thing called a Santa Claus rally. Whether that's, in fact, that is what we've seen, who knows? Only time will tell, and that's only the power of hindsight as well. Now, on Thursday, I have had someone ask to do a review on Renogen, and that is listed on the US stock market. So come back on Thursday, we'll take a look at that. And like always, if there is a share that you would like me to review, let me know in the comments. And also, please remember to let me know what you would like to learn specifically on Sharesies, so we can create a really good course for you that will cover off everything that you're wanting to do with getting started on your share trading journey. So until Thursday, take care.